The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we took a look at the market action on the day Tuesday, mostly quiet again in the grains and oil seeds, kind of in the red really across the board, a little bit of green and bean oil, but just moderate losses as we kind of drifted around. Cattle futures ended up mixed on the day. Hogs were a bit off the highs, but still in the green. Overall, just not a lot of fresh news, again, to drive this trade as many folks are seemingly gearing up for next week's prospective plantings and grain stocks numbers and tariffs on April 2nd and much more. Let's talk about this and try to put some perspective on these markets, though, right now. Joining us, Tyler Schau with agmarket.net. Tyler, it's good to catch up with you again, my friend. How are you?
We're doing good. It's always good to visit with you, Jesse.
I was going to say, are folks probably not quite yet in the northern plains where you're at, North Dakota, but I know some folks in the southern Midwest are getting that itch to get out and get some field work done, Tyler.
Yeah, we were actually together at some meetings down in Las Vegas over the weekend, and one of our partners with John Stewart and Associates was telling us that his Facebook feed was full of farmers in southern Illinois getting out there and getting rolling. I know some other areas around Matt there in Windsor, Illinois. They've been putting gas down pretty heavy for the last few weeks. Up in our country, we're still prone to some pretty good freezes and some cold weather and some frost in the ground. So it'll probably be another couple of weeks. Talked to a few guys today, so they're getting ready to go through air seeders and hopefully in the next 2 to 3 weeks be ready to start rolling.
Well, of course, planting season time frame, folks get busy and they're not really paying attention to the markets. But I have to think that folks are going to be paying attention next week with the USDA reports come out, those respective plantings. And I know you guys, agmarket.net, on Monday released your official estimates as we're getting a lot of folks releasing their pre-report estimates. And I mean, it seems, Tyler, that a lot of folks are, and you guys included, are on that train of we're going to see more corn acres and soybeans this year. I mean, talk about your guys' estimates overall, just to start.
Yeah, so we'll start with corn. We were at like 95.4 million acres of corn. That's going to come in above the USDA outlook for them at 94. We just got the Bloomberg average results, and I think their average is 94.4. So we've got about a million acres more corn that we're expecting to see planted. We don't do a producer survey that we're mailing out to our customers. I don't want to get into all the specifics on statistics and how a lot of times they're pretty invalid in our opinion. But our partners at JSA, they do kind of an unscientific survey that goes through a lot of elevator managers, end users, kind of what they're seeing in their local area. All the brokers also submitted their answers to it. And basically the story that came back from that survey was, hey, we're going to see more corn. That's what we're hearing from seed dealers. That's what we're hearing from farmers. That's what we're hearing all across the industry. We're going to see more corn acres. Matt, he has the opportunity to go out and speak all over the Midwest, basically solid from January through March. And he said, everywhere I go, I ask, how many you're going to plant more corn, considerably more corn acres than you did last year. And he said, 75% of the hands in the rooms go up. And every conversation he has afterwards, people tell him that. So we just keep hearing that over and over and over. You come out in my country, I talk to seed dealers. As of a few weeks ago, one seed dealer that I know of in particular hadn't sold a unit of soybeans as of yet. We're going to see soybean acres drop. Right now, if you look at the dollars and cents, corn still will pencil out, especially given the spring average price of $4.70 on D's corn. That was a nickel better than last year, where beans are a full $1 lower than last year's insurance price. So you add it all up, you do the math, it's just really hard to pencil out anywhere near profit on soybeans. Corn still does, so we think that's going to reign true. And then when you throw in the delta and the poor pricing structure of cotton right now, those guys are looking for some different crops to grow. I mean, there's some, if you own a cotton harvester, you've got to cover a certain amount of acres. But we think we'll see some decline in the cotton acres going into production, and that region, typically they would replace that with beans. That's not profitable. So we just see a a move to corn all across the board. So that's really what drove our decisions. That kind of what led to our soybean expectation at 82.7 million acres of soybeans, and then we're at 47 million acres of wheat.
Well, I know you were telling me this off the air, and it's kind of interesting when you look at the acreage breakdown. And at the end of the day, we're not going to know until USDA throws us their numbers on Monday. And then that's going to drive trade sentiment for a while. That's going to be kind of the new goalpost benchmark, so to speak. And I mean, what if corn acres get up near 96, 97? I mean, that's very, very high. I mean, what does that potentially do to the markets here, Tyler?
Well, it has been done before. A lot of people forget the prospective plantings report in the spring of 2020 for the 2021 crop year came out with 97 million acres of corn. I think the low that year, it wasn't on Dees corn, but the low in corn for that year tipped below $3 at one point. So got pretty ugly in the corn market that year. Now, something interesting also happened in the spring of 2020. It was incredibly wet. It was a little bit late getting in a lot of areas, and by the time we got the final plant number in January of 2021, it had dropped all the way to like 90.7 million acres. You've got to remember these are surveys that are sent out to producers. It's from the first 2 weeks of March, and it's, hey, what do you plan to plant? Not what are you going to plant? There's a lot of things can happen between those first 2 weeks of March and when the crop actually goes in the ground that can change, whether it's weather changes, whether it's economics, a whole host of things. And so not only do we have that prospective planting report, we've got the quarterly stocks report. We're going to find out what usage was for the first quarter of this year. Feels like it's been pretty good. We're going to see some pretty good disappearance going to export and to ethanol. So that could change a few things. And then just 2 days later, we've got the April 2nd deadline where the Trump administration announces their tariffs on tariffs on tariffs. I think that's how far it goes at this point. But that's going to change the game for the macroeconomy as well again. So a lot of stuff up in the air. I would assume whatever we see on March 31st will not be what we see on June 30th when we get the final plant numbers from the USDA, and then that's liable to change as we move throughout the fall.
So how do we manage our risk in these markets ahead of key items such as the USDA reports, tariffs on tariffs on tariffs? I like how you put that. I mean, how do we manage our risk? Because I wonder if a lot of folks, they've done a fair amount of marketing already this year, or they're just waiting to see what all happens, and we're kind of getting lulled to sleep here with a lack of significant movement in these markets, a lack of volatility here the second half of the month. So how do we manage our risk in the grain trade, Tyler?
I can just tell you what our approach is and where we're at right now. We're about 25% sold on some new crop. We're 100% sold on old crop. We did go in over the last few weeks, bought some call options to protect that old crop corn in case we get into some weather issues as we move throughout this spring, in case these acres are lower and our estimate is way off, and that gives a jolt to the corn market. One of the things that we do pay attention to, JSA did a study, and they came out and said 20 of the last 20 years, at some point between March 1st and the end of the contract, both corn and beans, new crop corn, December corn, and November beans, will go back to at least the February average price. On corn, that's 470. On soybeans, that's 1054. Right now, with a full slate of weather issues ahead of us in the Midwest and some concerns on dryness as we move forward, we're going to be a little bit patient on getting active on pricing physical bushels, or maybe even selling the board on a long-term basis. One of the things we have looked at, if you're someone that hasn't done a lick of marketing on your new crop and you are a little bit nervous about this report, take a look at some May short-dated put options. It's going to get you through next Monday, through the tariff announcement day. It'll buy you about a month's worth of coverage as we move forward, and at least give you a little bit of insurance in case it is really big acres or there is some type of tariff announcement that really hurts the grain markets as we move forward. Other than that, we're going to be a little bit patient before we start chewing off more of our risk as we move forward over the next couple months.
On the wheat side, too, any concern you have when it comes to weather right now? I know that's been talked about not only here in the U.S., but in the Black Sea. And I especially think about some of the drought concerns on the northern plains ahead of spring wheat planting. Any concern for weather when it comes to wheat?
For me, it's a concern, and I have to check myself just a little bit and not get backyarditis. That's always a problem with anybody. That's why a lot of brokers like to move out of the Midwest so that they don't see the crop deteriorating in their backyard and think that it's happening everywhere. But we're coming out of a winter where we had virtually no snow in the majority of North Dakota. You get into the north along the Canadian border, they had a little bit more snow and maybe a little bit more rain there this fall. But the overarching theme of spring wheat country, especially, is dry and drier than normal. The last time we came into a scenario like this was 2021. That was a really tough year on the spring wheat crop. So it's something we're paying attention to. We're not kind of the same deal there. We're not getting overly sold. We're kind of holding some ammo for a spring weather rally. We think if things don't change and they don't change within the next month, we should see higher wheat prices. Now, there again, you've got the same thing. You got some geopolitical tensions. Wheat's been under a little bit of pressure the last few days on a possible renewal of the Black Sea grain initiative. So we'll have to keep our eyes on that. I don't want anyone to hear this and just get wildly bullish wheat, because wheat has a tendency to do what wheat does, and that's disappoint us when we start to think it should go higher. So we're going to be cautious, but we do think there'll be some better pricing opportunities as we move throughout the spring and summer.
We're talking with Tyler Schau from agmarket.net here today on Market Talk. Let's go over to the livestock sector. Cattle futures, kind of quiet. I would say I was at least happy that we clawed off the lows on Tuesday's session. I know last week was plenty of wild optimism in the cash trade again. Every time we've called a top in this market, or at least where I've brought it up, we don't have it. We keep finding a way to go higher, or we correct a little bit and then move back to the highs again. So as you look at this cattle complex, Tyler, especially after that on feed report from Friday and more, what are you watching as we round out the month?
Well, I mean, it's going to be interesting how the next few days play out. One of the things that I've always talked about is the I don't pay a ton of attention to the cattle on feed report. I do. I take a look at it. I try to dive into what's going on. But the market reaction a couple days after usually sets the tone for the next month or so. So right now, that doesn't bode all that well for the cattle market. Feeders usually kind of hit a little bit of a lull here this time of the spring. They especially have the last couple of years. And then we're at extremely high price levels, especially in the feeder calf market. So one of my concerns has been the extreme length of managed money in the feeder calf market. And if they decide they want to exit, if this cash market starts to get a little bit shaky, they're going to be looking to bank the profits that they've made on their long positions, get out, and possibly get ready to reload for a later run this summer. So it's one of the things I'm a little bit concerned about. I talk with a lot of cow-calf producers, a lot of guys in the backgrounding business, and I just keep hammering on the whole thought of, it's a lot easier to buy puts and LRP when you can rather than when you have to. So we've been encouraging getting some hedge protection on at these levels. I mean, even if you take a look back to last Thursday, I think we kind of set the highs on most of these markets in there, or recent highs. Even where we're at today, $6, $7, $8 back of those highs, it's still a good spot to lay into some type of hedge protection.
I've noticed too, and I know some folks keep an eye on that choice select spread in the box beef market, just continuing to widen out again. I mean, you saw choice up almost $7 at midday and select up just like a dime. I mean, just, some of those moves in box beef, and you mentioned, some of the talk you hear from cow calf guys and backgrounders, and you look at that cash trade and more, it just, man, I guess I would say it this way: when the top is truly in, I think we're going to know it because it's going to happen hard and fast.
Yeah, the cash market's going to be the one to really watch, and that's something we try to pay really close attention at in my office is the cash market for feeders. Our Anthon office pays really close attention to the cash market on fat cattle. So far, those have stayed very strong, and we've not seen much of an indicator on backing off. But I would guess, same principle applies when I talk about like the managed money and maybe them getting a little bit nervous and ready to bolt. The people that got to buy these things in the cash market, they would rather pay lower prices for them. So they're probably looking for that opportunity. And if that market does start to break, you might start to see some of them sit with their hands in their pockets at the sale barn. That could pull this thing down relatively quickly. There's a lot of froth in this thing, so it's got me concerned. Fundamentals are still strong, no matter how you slice it. So I'm not here to say cattle are going to stay high forever. I'm just saying pay attention and watch your bottom line.
How about that hog market? We found a little support there. Wondering when we might see this hog trade get some more support from domestic pork demand, for instance, as summer grilling season's not too far away. Anything you're watching in hogs right now, Tyler?
We were watching it. It's just kind of, I'm afraid it's going to do one of those things like I'm worried about in the corn market, lull us to sleep and then either jolt higher or jolt lower. It's kind of had the same move, a fairly good pullback in the early March, and then the last few weeks we just kind of traded sideways, trying to figure out some direction. I would think some grilling season demand will help improve the outlook over the next few months. The only thing I will say is you got 90 to almost $100 hogs, which while compared to beef isn't great, compared to history isn't a bad price for that hog. So I think a lot of it's going to depend on what the beef industry does. If we can maintain those high levels, I think it's pretty easy for hogs to stay up where they're at.
All right. Final thoughts, Tyler. We managed to find enough to talk about here for the show today, even with a quiet market trade. But what would you leave folks with? What would you reiterate to folks before we close it out?
I think, paying attention to the weather. The weather is going to start really playing a role on what prices do over the next month. As I mentioned, if you look at the drought map, it's creeping in. I'm not trying to scare anyone or make them think these prices have got to go higher. A reminder that a lot of times all it takes is just the right amount of rain at the right time, and we can get pretty good crops across the board. So it's something we need to be paying attention to. But I do think we're entering I call it the colorful map season for the next 2 or 3 months, where you're going to look at maps with all kinds of colors on them, and they're going to change daily. So it's one of those things a person's going to have to pay attention to, especially in the wheat and corn market in the Western Corn Belt. You're probably going to see quite a bit of maps pop up that say there's going to be some moisture come in, and then it's got to verify. So that's one of the things I'm probably watching the most, or our whole team is watching the most as we move forward over the next month and a half.
Tyler, folks want to reach out to you or the ag market team for a conversation. I know a lot of ways to get in touch, intel online and much more. How could folks reach out?
Easiest way is look us up on the internet, agmarket.net. There's a contact page. You can see if there's a broker in your area.
Fantastic. Agmarket.net for more. Tyler Schau, always good to hear from you, my friend. Thanks for joining us on Market Talk. Have a good week. We'll talk to you again soon.
You bet. Take care, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.